Much, Natasha. Let's speak now to economist and oil and gas specialist Cornelia Meyer. She is the CEO of Meyer Resources, joining us from Bern in Switzerland. Cornelia, thank you for being on the program. For consumers who are starting to see whether it's gas prices in the U.S., or I should say petrol prices in the U.S. and gas prices in Europe, and there are also consumers in Asia who are seeing either the scarcity of oil or who are seeing prices rise. What is this going to mean for consumers that the IEA is calling for the release of 400 million barrels of oil?
Thank you so much for having me, Cyril. Well, it's good because what you will see eventually that it will have an effect on the oil price. But mind you, 400 million barrels is as much as the highest number they ever released. However, it's less than 4 days of global oil consumption. So we have to put it all in perspective. And there's only so much you can do. Essentially and eventually, we need the Straits of Hormuz to open. And that will, by the way, take time. We need for the GCC producers and Iraq to be able to restart the production that they have shut in. But again, it's not a light switch. It will take time. So we will see heightened inflation. People will feel it in their pockets. Maybe in the short run, a little bit less thanks to the release, but you know, they will feel it. We don't get around having to make sure that the Straits of Hormuz open again.
Cornelia, I hear what you're saying, that this is not a silver bullet. That this will only contain the rise in energy prices for so long. Roughly how long?
That's hard to say. We will have to see. Look, when you look at in such a situation, what are the levers that help? It's spare capacity. Spare capacity is in the Gulf, so that's out. Then it's resistance, consuming less. Consuming less. That is one thing. So in the meantime, it's just very hard to see how long. But if prices go up too high, the economy it will be bad for the economy, so there will be less demand. But that's not a good scenario at all.
I'll give our viewers two concrete examples, by the way. You have restaurants in India that are about to run out of cooking oil. That's just one example from halfway across the globe from where the war is actually happening. Another example is that some airlines, because they're now paying more for their jet fuel, they are going to increase the price of their tickets. At some point, and you've explained this, at some point the effects of this spare capacity that's being released, at some point those effects run out. Then what happens?
It's not spare capacity. It's strategic reserves that are released.
Yeah. What happens when? So that's supposed to help, but you said it only will help for a limited period of time. When it stops helping, then what happens?
Well, we will have even more inflation, and you will see people, traveling. They're doing already traveling less, using less oil. It will have really a devastating effect on the economy. And I mean, Nasser, the CEO of Aramco, said yesterday, look, if this strait doesn't open soon, it will have a devastating effect on the global economy.
So most of the oil-producing countries and gas in the Gulf, whether it's Qatar, Saudi Arabia, the Emirates, Kuwait, Bahrain, their energy, oil and gas, goes through the Strait of Hormuz. That is what is currently closed because ships are too afraid, with good reason, I might add, to go through that particular waterway. The Kingdom of Saudi Arabia, however, does have an alternative way to get its oil out. It's the East-West pipeline, right? Such that the oil would no longer have to be shipped through by boat through the Strait of Hormuz. It can just cross the Arabian Peninsula and then go out through the Red Sea. That, I think you're going to tell me. Go ahead.
It can go out to Yanbu. Fine, but this is only about a capacity of about 5.5 million barrels a day at its best.
That's what I was going to ask you. How much of a shortfall does this make up for?
Saudi production is about 10 million barrels a day.
Sorry, say those numbers again.
It's about 5.5 million barrels a day capacity at its best, but the Saudi production used to be about 10 million barrels a day. The Emiratis also have a pipeline going to Fujairah, to the Gulf of Oman, which is also only about 1.5 million barrels a day, so which is also less than half of their usual daily production.
Okay, therefore, if the Strait of Hormuz remains closed, and now that the International Energy Agency has already made this big announcement, biggest historic emptying of, or releasing, I should say, of strategic reserves ever, now that they've already done this, if the Strait of Hormuz remains closed, what's the next move?
Well, they have more reserves that they can release, but this is just not a road we want to go down. And I quote Amin Nasser again. That strait really needs to be open. You know, it's 20% of oil, crude, and products that are now taken out of the market, and it's 20% of LNG. And
but Cornelia, pause for a second.
Especially Asia will feel that.
I completely understand your point from an energy market standpoint. You're saying that that strait really needs to reopen. I get it. But there's a war right there around that strait. Iran is on one side of the war, and it is their biggest leverage over the entire world to try and end this conflict. So they are not going to reopen this until they can get, benefit from it. So in other words, what I'm saying is it may remain closed. My question to you is, what then?
Well, hyperinflation and really bad impact of the economy. By the way, forget rate cuts in the US because inflation will be so high that you can't cut rates. So it is really sort of a very, very, very dire scenario for the global economy. And it's especially a dire scenario for developing countries because they will no longer be able to afford the LNG. Bangladesh, Pakistan, the LNG cargoes they need. 30% of fertilizer also goes through the Straits of Hormuz, and that will have food inflation, and that will have big impact on again developing economies. And again, we don't have a USAID and a lot of the aid money that we used to have before anymore because USAID is shut in, and because Western countries are preferring to look after defense rather than overseas development.
Yeah, this really is affecting and will continue to affect consumers globally, as we said, from the U.S., Europe, South Asia, Southeast Asia. Cornelia Meyer, CEO of Meyer Resources, thank you very much.
Thank you very much, Cyril.